Namaskar and welcome to the Economic Brief. This is a program that looks at key stories of consequence from the world of business and finance, and we contextualize them both from the local as well as the global perspectives. On the show today, we look at why India needs a credit rating upgrade. We also ask the question, can China overtake the US economy given concerns about whether, its own economy has peaked? We'll also look at the impact of major business leaders, backing Donald Trump, and check on what Trump and his rival, the President Joe Biden, have in mind for the US economy. Well, that's not all. We'll also get you, this week's top stories from the world of business. But at the start of the program, we are going to look at what Shaktikanta Das, who's the 25th governor of the Reserve Bank of India, as well as the current incumbent governor of the Reserve Bank of India, what exactly he said recently about whether India needs a credit upgrade. He was speaking to a television channel, a private television channel, a business television channel, and this is what he spoke about. He said that India's macroeconomic fundamentals are very strong. As a result of that, growth momentum too is very strong. All these seem to indicate that India is doing really well. International investors' confidence is also very strong. Clear indications that India definitely looks like it needs an upgrade. There's huge foreign exchange reserves, and that gives confidence to international investors. India is also well positioned, he says, to service its external payment obligations. Hence, with such a large reserve of foreign currencies, India can, as a result of that, indulge itself in the external markets. Now, also, a rating upgrade should have happened much earlier, is what he said, given the fact that this is not the story of India today, it's the story of India for a reasonable period of time. And the government too has been very clear in its policies, especially on the fiscal consolidation part. We are seeing that in the budgets, that the target now of reducing fiscal deficit to 4.5% by 25-26 is on track, and the government is moving in the right direction to achieve all its targets. This is what Shaktikanta Das says. So the RBI, keeping a track of the Indian economy, seems to clearly see that all the indications are right. Credit rating agencies have an influence, we know, over investor decisions and also borrowing costs of particular countries. But whether those are truly, a clear picture of what an investor will be looking at, most of the big international investors, they conduct their own analysis and they make their own decisions as a result of that and make their investments accordingly. The RBI's primary duty, is what the RBI governor says, is to ensure that there is financial stability within the country. So let's take a look really at what India's rating is currently. S&P, that's Standard & Poor's, has rated India at BBB minus with a positive outlook. So they've changed it from stable to positive quite recently at the end of May this year. Fitch has a BBB minus rating with a stable outlook. Moody's has a Baa3 rating and a stable outlook. But we must understand that BBB minus, in fact, is the lowest investor grade rating that any country can have. This is not, what we've seen countries of the size of India having in the past. All former fifth largest economies had much higher ratings. Ratings reflect the economic size and also the ability to repay. And just as I've been talking about for the last few minutes, we can clearly see that India is well poised to repay all its debts. So fifth largest economies, in fact, were rated AAA or AAA ratings in the past. Time now to talk to our guest, Dr. Charan Singh, who's the CEO of eGrow Foundation, an eminent economist. He knows a thing or two about these numbers. So let's ask him straight off the bat. Dr. Charan Singh, do ratings matter that much, or do investors know, by their gut this is where my money needs to go, and this is this is the country that has the best chance of growing?
Actually, both of them are important. I must admit with you that foreign exchange reserves, good fiscal policy, obviously leads to very good ratings. The non-performing assets of the banks are coming down. The buffers are very high. The inflation figure is much under control vis-a-vis the rest of the world. Obviously, these are very good economic factors which justify a very good rating. But despite these very good indicators, one has to admit the growth rate in the economy has been so strong, the continuity in policy and the stability in the fiscal and monetary policy of the country has been so good that the flow of money into the stock market, obviously, irrespective of the rating, is going to take place. So if you look at what has been happening in our country in the stock market, which is one indicator of how the rest of the world looks at you, it has been very, very positive. So I would say that both matter. If the ratings are very high, then of course the rate of interest, if one of the companies is looking for borrowing from abroad, it becomes easy. But when it comes to the question of investment, I think the flow of investment has been so good in our country that though the rating agencies have not raised the ratings, they have not done it despite the governor saying, and obviously the figures have been there for long. Look at the growth rate figures which we had in the previous year. Despite that, they have not raised it to where it should prudently be. But the flow of resources in the country has been continuous.
Indeed, Dr. Charan Singh, are ratings influenced, these agencies, are they influenced by preconceived ideas about large developing economies? Because not only India, China also had this problem, and they were also growing, and they also had a lower rating. Because they may be concerned that, large countries need to feed and care for massive populations. But these populations are also seen, as markets which are waiting to be tapped.
Absolutely, absolutely. I totally agree with you. Means India, look at the country like India, it has one of the best regulators, the RBI, the SEBI, and even insurance regulator. Look at the type of industries, look at the stock market indices, look at the companies which are in the stock market. If you look at the complete plethora of things, the banking institutions, the regulation and supervision of those, you look at the complete ecosystem that is there in the country, is so rich. And therefore, obviously, the rating should have been very high. But as you rightly said, and I have no qualms in mentioning, that there is a bias against emerging countries.
Yes.
The advanced countries somehow always carry a doubt whether this is the right thing or not. And the rating agencies play to the gallery and do not really give the right rating agencies. And if you look at the defaults that have taken place in Europe, now who can forget Greece? Despite that, now where did the rating agencies show us in advance that that's a red light area, you should not go there? Nobody showed us the red light there.
Absolutely.
But when it comes to emerging countries like India, nothing is happening, nothing untoward is happening, and still there is cautious. And as you were mentioning in your rating, some of these rating agencies put us at the lowest ebb of the investment grade. That is why for some time, many of us are questioning the people in the rating agencies, their expertise, and their assessment matrix.
Okay, I'm going to put you in the spot, Dr. Charan Singh. What do you think should be the appropriate credit rating for India?
Means I would rate it amongst the best in the world today. The market is moving. Everything that should be stable is stable in terms of fiscal deficit, in terms of inflation. We are doing very well. Foreign exchange reserves the import cover is very, very high. There's policy continuity and policy stability.
Right.
Look at the policies. There's such a huge it's a continent-sized country. There's been a political event which has been very, very large. All sort of political parties are playing a role, different ideologies. You see the smooth transition in the government. So therefore, what else does the world need to look at? And that is what is reflected in the stock market when it moves. Because the transition is so smooth despite all odds. That's why I say India deserves a very good rating. The next point I'd like to mention is the growth rate. Look at the growth rate. Even IMF has raised the growth rate. For many countries, it is low. It's lowered for Japan, it's lowered for USA, but for India, it has raised it. Incidentally, it has raised for China too. But if you look at a long-term trend of growth projections done by the IMF till 2029, you find that India has been raised to 7, which I'm sure we're going to surpass.
Okay.
But even in the next 5 years, it's 6.5. Whereas for
Right.
China, we increased it this year, but over a 5-year period, they are keeping the other end at
Dr.
3.3.
Charan Singh, in fact, we do have a story on China, so I'll bring you in on that as well. Do stay with us. You know, the Chinese economy has depended on exports for its growth. Its low cost of production as well as access to global markets had made it a considerable player in global supply dynamics. But back home in China, consumption demand was slacking. The property market had crashed. An aging population was beginning to hit labor markets, and it was adding up, as a serious deceleration of growth. So much so that questions are now being raised about whether the world's second largest economy has peaked. Let's look at this report.
The economic rivalry between China and the United States has been a topic of intense interest. In the first quarter of 2024, the US economy expanded by 1.6% year-on-year, down from the previous quarter's 3.4% growth. China's economy showed signs of recovery, posting 5.3% annualized growth for the same period, slightly higher than analysts had predicted. The US economy relies on consumer spending and a robust job market. China faces challenges due to a property sector crisis, declining foreign investment, and tepid consumer confidence. The International Monetary Fund projects the US to finish strong with a 2.7% GDP annual growth. They believe China can meet its target of around 5%.
I think the growth target of 5% set by the government is still achievable for this year, though more supportive measures may be needed. I think the government can certainly roll out more programs to boost consumer sentiment.
But the Chinese economy faces several complex challenges. China's rapid growth over the past decades has slowed down considerably. Beijing's efforts to stimulate growth may fall short, affecting overall economic performance. China's debt levels have also risen significantly. Balancing debt reduction with economic expansion is a delicate task. The heavily indebted real estate developer Evergrande's crisis highlights the risks. An aging population poses challenges for labor force dynamics, pension systems, and healthcare. Urbanization remains a powerful driver, but managing migration and ensuring quality of life are crucial. Then there are environmental challenges. Balancing growth with sustainability is essential. Trade disputes with other countries affect China's exports and imports. A deceleration in China's economy is impacting suppliers, workers, and its technological competitiveness.
I think what we're going to see in terms of the way China looks in the future is we're going to see the onset of the digital economy.
China's economic future hinges on addressing these multifaceted challenges. China faces more challenges than anticipated that may make it harder for the world's second largest economy to overtake the first. Also, several measures of President Xi Jinping, like the Belt and Road Initiative, are not meeting their desired goals. The Economic Brief, DD India.
Let's turn to our expert once again. Dr. Charan Singh is with us. Dr. Charan Singh, do you think China's economy has peaked? Japan too at one time was expected to overtake the United States, but we know that that never happened. So do you think that China too is never going to overtake the US?
My own gut feeling is China is not ready to overtake US, not in near future. And China has a long way to go in doing that. Please also remember when we say taking over the future, it's not the GDP where China is number 2 compared to USA, but it's also the per capita income. And if you look at the per capita income, America's per capita income is 80,000 plus. China's is, I think, around 12,000 or 13,000. So there's a very big gap between the two. So that's not going to be easy. As far as the absorption of global growth and exports are concerned, as you know, that America today accounts for nearly 22% of world GDP. China, of course, accounts for about 13 to 14%. But the currency strength that America has and the resources that America has are immense. One of the indicators that I mentioned to you is per capita income, which shows the absorptive capacity of the people. So the reserve currency status in each coffer of the central bank of the world, you will find US dollars sitting there. The foreign exchange reserves composition, the international reserve currency status that USA has enjoyed for nearly 75 odd years now is difficult to parallel. In contrast, while the American economy is going strong, even now, despite all the odds since the Lehman Brothers happened, you find that American economy, despite the slowdown, is in the range of 2.93%, which is very, very large and very, very strong. The disruptions that are taking place in the Chinese economy are immense. As you mentioned, they experimented with the one-child policy. That was a disaster. The aging population is so large that the burden is massive. Also, please remember, the construction boom which was happening in China was not really required there. It was exceeding the requirements. That has come home to roost now. There's been a crash in the market, in the real estate market, as your report also showed, and that's going to take time to recover. If you look at the projections that have been made for China, they are all petering out. Now, it is not only now that the world is thinking of China crisis. I was at the IMF in 2009 to 2012. Even at that time, the fear was that the China bubble is going to burst.
Right. Dr. Charan Singh, Adam Smith had said that markets need to expand for growth to take place. So do you think that the Chinese supply side is, unable to find new markets? After all, that's what they were doing. They were growing by exports. And the Belt and Road is also not being talked about very much anymore.
There are 3-4 things which play a very important role in a country becoming or assuming the role of a global economy. The most important thing that one has to keep in mind is that China's growth was not really based on fundamentals. I have absolutely no qualms in mentioning. Many economists have expressed that fear for a very long time. The way they built their foreign exchange reserves, the way they killed the global manufacturing, they were manipulating their exchange rate. Many economists have already written about it at length. Now, when the fundamentals are not very strong and you are manufacturing at a certain rate but subsidizing it heavily and putting it into the international market, one day or the other, that is going to come up and show. And that's exactly what is happening now. The system, the autocratic system of production that was taking place, it was not really very competitive. The scale of production was very large, and that is why they could compete out, and the subsidies were very large, and that's why they could compete out manufacturing from the rest of the world. But if you open them to the competitive environment that the rest of the world had, they would not have been able to compete. Of late, the sentiments that have happened against China for various reasons, including the recent pandemic and even otherwise, the thoughts in the mind of people, global policymakers, that China's strategies, the data, the statistics is not very transparent, not very robust. That has now started playing a role. And that's why you had the China Plus. So when Adam Smith said about the markets, he really meant about the markets which are transparent, which is where the productivity is strong, and which is transparent to everybody to see the cost factors, the input story, everything. But in the case of China, that was not happening. And that is why the sentiments against China are reflecting against the absorption of exports from China.
Okay. Then, Dr. Charan Singh, can the United States, on the other hand, regain some market share in global markets? Because apart from the huge market for the US dollar, as you were mentioning, all the reserves, it's the reserve currency of the world. If we look at it as a commodity of influence, how long will that carry on? After all, that's what's pushing the US economy also to a large extent in international markets.
I totally agree with you that over this last 5 years, American economy has emerged rather stronger relatively to its competitors. There's absolutely no doubt about it. Will it regain the market? Will it regain the market share? I must mention there's a political cycle which is taking place in America. As would be anticipated, the projections and the scenario analysis, if the current regime continues, they have a different trade strategy. if there's a Republican president, they have a different trade strategy and they have a different production strategy.
Okay.
Now, keeping that in mind, one has to then make a projection as to what will be the global share that the Americans would like to, or Americans would like to target and aim at. Please also remember, there are some problems happening in other countries which are number 2, number 3, like there is an automobile plant shut down in Japan for various reasons. So you find that even globally, there is a competition which is eating into different countries for very different reasons, as you know it.
Sure.
Yeah?
So, a final word, Dr. Charan Singh, how best can India fill the gaps in its rise to become world number 3 in terms of economy size?
I tell you, it's a God gift. China is, as was expected long time ago, is going to go down the hill. It has started going down the hill. Japan, which was already also holding a very tight position, you find aging is also a big problem in Japan. And in Japan, there are supply disruptions which has impacted Japan economy. So Japan obviously is on the downslide. As far as America is concerned, given the change in the political system and the rapidity with which the change is taking place in their ideology, in their presidency, if projected correctly, then you find there's lots of uncertainty in America too. Given this scenario, people have already been talking about China Plus. Given this scenario and given the backdrop of India emerging as a very strong economy, growth, stability in policies, and robust financial system, banking as well as the market, I think India now stands a very strong chance of coming back into the system. I think India has to play its macroeconomic policies very carefully, both monetary and fiscal, and I think it has to use its trade missions across the world to put in a word, and I think India now stands a very good chance to get that role quite rapidly.
We'll have to leave it there. Thank you very much, Dr. Charan Singh. Thank you for joining us and throwing light on these important subjects, especially the situation between China and the United States in terms of economies as well as India's rating. Thanks very much for being with us. Let's move on to our next story, and with more and more industry leaders backing the Republican nominee Donald Trump against his rival President Joe Biden, all eyes are now on the economic plans of these two rivals. Let's look at this next report.
13th July 2024. The day has been etched in the US history. An assassination attempt was made at former President and Republican nominee Donald Trump at an election rally. Shortly after being shot, a wounded Trump raised his fist. The image of the incident immediately became viral. As expected, the attack garnered reactions from across the world. Those praying for the Republican nominee's recovery included top American business leaders. In fact, it was arguably the first time many of them rallied behind Trump during the ongoing poll campaign. Tesla CEO Elon Musk minced no words and said that he fully endorsed Trump. While Amazon CEO Jeff Bezos said that Trump showed tremendous grace and courage under literal fire. He added that he was thankful for his safety. Other business leaders like Apple CEO Tim Cook and Google CEO Sundar Pichai also sent well wishes to Trump. The support has not gone unnoticed. Calling for donations for his campaign, US President Joe Biden tweeted that he was sick of Elon Musk and his rich buddies trying to buy this election. To understand business leaders' stand, it's important to decode the economic promises made by Trump and Biden. Trump has proposed extended tax cuts for households and corporations, while Biden has opposed tax reductions for big firms. Both Trump and Biden more or less back tariffs on US imports. While Trump is expected to oppose clean energy provisions, Biden has pushed for such initiatives. Support from top industry leaders is crucial for US presidential contenders, owing to the donations they make to political campaigns. So it won't be surprising if economic issues take the center stage in the US presidential election campaign. The Economic Brief, DD India.
Well, that's all we have on the show. But before we leave, we are going to give you, quick briefs on business news in brief. Thanks very much for watching the Economic Brief. Namaskar.
Taiwan Semiconductor Manufacturing Company, the world's largest contract chip maker, raised its full-year revenue forecast due to surging demand for chips used in AI. The French Competition Authority confirmed that an investigation is underway into chipmaker Nvidia over alleged anti-competitive practices. Elon Musk won dismissal of a lawsuit claiming he refused to pay at least $500 million of severance to thousands of employees he fired after buying the social media company now known as X. Microsoft has given up its board observer seat at OpenAI in a move aimed at easing US and UK antitrust regulators' concerns about the extent of its control over the AI startup. Apple will open its Tap and Go mobile payments system to rivals, EU antitrust regulators said, ending a 4-year-long investigation. Archegos Capital Management founder Bill Huang was convicted of fraud by a US court in relation to the 2021 collapse of his investment firm. The yen rose sharply in what traders suspected was likely the result of another intervention from Japanese authorities to prop up the battered currency from multi-decade lows. Zomato founder and CEO Deepinder Goyal has become a billionaire following a record rally in Zomato's shares over the past year. An Indian tribunal on Tuesday started insolvency proceedings for edtech firm Byju's after the country's cricket board complained about failure to recover $19 million in dues. The International Monetary Fund reached an agreement with Pakistan for a $7 billion loan program.